All right, well, Salesforce shares, they are soaring in extended trading. Look at that, up just over 14% right now on the heels of what is looking to be a very solid report here from the company. Salesforce's fourth quarter results topping expectations as well as its full year forecast coming in stronger than expected. For its most recent quarter, we are looking at revenue of $8.38 billion, adjusted EPS of $1.68 here. And again, that strong guidance, one of the big drivers in the after hours action. Let's bring in Rishi Jaluria, RBC Capital Markets software equity analyst. Rishi, great to see you here. So first, just your initial take, your initial reaction to this report.
Yeah, thanks so much for having me. Look, I think this was exactly the quarter that Salesforce needed to put up with all the activist pressures around them. Quarter came in better than I think anyone expected. The revenue guidance for next year for FY24, not as tough as I think people were expecting. But the big surprise was on the profitability front. I mean, they put up 29% margins this quarter. They're guiding to 27% margins, which they may be able to beat for next year. They increased the size of their share repurchase. I think this quarter was enough to buy Salesforce and Marc Benioff some time.
Let's talk about all those activist investors. We just laid out a piece with more than a handful. Another one joined the fray today, Strive Asset Management, and their co-founder, who, by the way, is a 24 presidential candidate, the founder of Strive, Vivek Ramaswamy. What do you expect to be the impact of this swarm, if you will, of activist investors?
Look, I think there's maybe different visions that the activists may have, as you outlined right prior to this. But ultimately, I just think it puts more pressure on Salesforce to execute. And they have an outside force watching them, right? So I think it stops them from making dilutive acquisitions, which has been a major pushback from investors to Salesforce. It does bring about additional scrutiny around their costs and kind of discipline around spending. And hopefully, I think it helps Salesforce regain maybe some of their lost mojo, where in the past, this was a very innovative company. I would argue maybe with the space of acquisitions they've been doing, they haven't innovated enough organically or as much as they historically have. And I think that's some pressure activists can bring in is invest more to actually integrate a lot of these acquisitions, integrate the different clouds so that ultimately you have a more integrated company and a better customer experience. And I think everyone benefits that way.
Rishi, how far do you think management has to go in terms of cutting costs to satisfy what the activist investors, what some of them are calling for and saying at this point?
They're guiding to 27% margins for the full year. I think that number needs to go to at least the low 30s with the sort of growth profile that they're talking about for next year. For activists to be happy, right? I think maybe 40% type, Microsoft or Oracle type margins are out of the question in the near term. There's a lot of structural changes you'd have to make to get that sort of margins. But low 30s is where I think they need to get to, and they need to get there fast, right? So if you assume that they're going to do a little bit higher than where they guided to for FY24, could they continue to drive that up, get to 30%, 33, maybe 35% type margins? That's what I think needs to happen in terms of cost cutting and margin expansion to make investors happy.
Interesting piece in the Journal about Marc Benioff, who is going to sit down with Brian Sozzi tomorrow, telling those employees that they were all family before cutting 8,000 jobs, or about 10% of employees. Do you think there are further layoffs coming at Salesforce?
I do. I do believe there are unfortunately going to be more layoffs to come. I mean, if you look at how quickly Salesforce has hired, especially, over the past 3 years, and then benchmark Salesforce's employee efficiency relative to other software companies, there's still, unfortunately, a lot of room to go. And unfortunately, I do think that is going to be more cuts to come, hopefully not as big as round two. Maybe it's more of just underperformers rather than broad-based cuts. But I unfortunately believe there are more job cuts to come.
Rishi, when it comes to the sector, the software names overall, which do you think is best positioned? We're also getting results from Okta this afternoon after the bell. Those results actually look pretty solid. The guidance there, pretty strong. Snowflake, on the other hand, another player in that space, their product revenue guidance missing the street's expectations. How does Salesforce stack up to them, and who's your top pick in that space?
Yeah, I mean, look, Salesforce is, an established company. Remember, a lot of these companies that we're talking about weren't around in 08, 09. Salesforce has weathered two recessions, right? They weathered, 2000, 2001, and they weathered 08, 09 as a public company. And you can go back and see how did Marc Benioff react back then. And so this is a battle-tested company. It is a little bit more, because of its size and because of the breadth of its offerings, it is a little bit more, I would say, defensive. If I think about my favorite names in the software sector, I'd give you two as a little bit of a cop out. One to be defensive, which is Viva, which actually just reported after the bell today. They sell software targeted at pharma companies. Should be a very defensive name with a lot of growth drivers. Just a very high quality, very profitable business. And then when it's, I think more of a recovery type play, I want to buy HubSpot, which to me is almost the anti-Salesforce, right? It is in the same space, but very much an organic growth story, and I think a really great business as well. So the two names I would buy here, Viva and HubSpot.
And finally, some recent news that Twitter would cut their Salesforce spend 75% from 20 million to 5 million. As we look out into Q1, Q2, do you think we'll hear more cuts, more caution?
Yeah, I mean, unfortunately, you've seen the layoff numbers in tech, right? I think we're at 110,000 tech layoffs in the first 2 months of this year compared to 160,000 in all of last year. So it's clearly accelerating. And for a seat-based model like Salesforce, right, that is a headwind. Now, I think the advantage Salesforce has that a lot of other companies don't is they have so many other products that they can bundle and maybe make up a little bit of that shortfall. That if someone, that's not in cash conservation mode like Twitter is because of their huge debt load, that Salesforce can come back and say, look, you've cut heads by 10%, but let's maybe throw in some Tableau or let's throw in Commerce Cloud to make up that gap so that they don't actually lose revenue in the same way. So I think Twitter is very much an anomaly because of their financial situation. I wouldn't expect to see these sort of headwinds on the rest of Salesforce's business from their customer base because of that bundling strategy.
All right, well, shares surging here after hours. Rishi, Jaluria, always great to have you. Thanks so much.